today I'll be talking about 3 Dividend Aristocrat stocks to buy for the month of August 2018. So I'm going to talk about what a Dividend Aristocrat is. I'll be talking about why these are good long-term prospects, and I'll also talk about why they're good buying opportunities right now. Let's jump right into the video. So number 1, a Dividend Aristocrat stock. So an Aristocrat stock is a stock that has increased their dividends year in, year out for at least 25 years. So that means even during a recession, they're consistently increasing their dividends. So that says a lot, especially if you guys are interested in long-term investing and income through dividends. Because if something decreases their dividends when there's a recession, then that's not exactly reliable. So these are, strong in that sense. The other thing with the Dividend Aristocrat is that it's listed on the S&P 500. So again, if you're interested in long-term investing, I would only buy stocks that are on the S&P 500 or other major indices such as the NASDAQ and the Dow Jones, although there is already a lot of overlap. And the other thing is that a Dividend Aristocrat stock has to be within a certain market cap and have some liquidity standards. So I won't get into what the last thing means. But basically, these are safe stocks to buy if you're interested in dividends. The first stock I'll be talking about today is 3M. So what intrigues me so much about 3M and these other stocks actually is that they're still on good buying opportunities. And what do I mean by still necessarily? That word still. So over the last 3 years, there have been 2 major consolidation periods in the S&P 500. The first one in summer of 2015, where we sort of had this W formation, and one here at the start of 2018, which lasted about 7 months. This one was a lot more sharper, this one was a lot more complex, but nonetheless, they took a lot of market participants by surprise. So consumer staples are no exception to that, and in fact, in my opinion, they saw a bit more of a pronounced drop than the rest of the stock market. So it would seem as though the S&P 500 had a really nasty 2 weeks and then sort of meandered around there, sort of had like a double bottom. But consumer staples and a lot of defensive type stocks continued to drop. Overall, consumer staples dropped about 15%, which is quite high for any sector. So some of the stocks I'll be talking about, actually none of the stocks I'm talking about are in the consumer staples sector. But in my opinion, and this might be to a fault, but I tend to lump consumer staples and defensive stocks all in one category, just because I feel like sentiment overlaps a lot when you're investing in aggressive things such as small caps and technology, or whether you're investing in something a little more defensive like consumer staples, like industrials, like healthcare, things like that. The first stock I'll be talking about is 3M. So 3M I've been talking about for a long time, and 3M in particular hasn't seen the same type of balance that a lot of consumer staples have already. So for example, I have been talking about PG a lot on this channel, especially when it was down here. The only thing I was watching out for was this overhead resistance, which lasted about 6 months. Finally broke above it, retested, and now we're off to the races. The other thing we have to break right now is this 200-week moving average. Once we do that, I feel like it's going to go back to all-time highs pretty easily. And in fact, I wouldn't be surprised if we do see a pullback on Procter & Gamble, but I think that's a different story. The other stock I've been talking about on this channel was Johnson & Johnson. So Johnson & Johnson pretty similarly had a lot of overhead resistance, which lasted about 5 months as well. So as you guys can see, literally the candles are brushing up against it. Once we did break through it, however, it was a really strong break, and now we're heading back to all-time highs. So these were the stocks that I was recommending around the lows. And I would also consider 3M one of those stocks that I was recommending, although 3M hasn't seen the same growth that those other stocks have. But I don't think that's necessarily a sign of weakness. Long term, it's still hovering above its 200-week moving average. We have a pretty nice bull hammer right here. So the question is whether this is the bottom or whether we make another lower low. The fact that we've seen such strong support here, and I'll go ahead and draw a rectangle, which I think is really helpful. So we have brushed up against this support since the middle of April. So about 4 months of support, finished off with a really nice bull hammer. This could indeed kind of grow a little bit slower, but still, I really like 3M right now. We can go ahead and take a look at their dividend yield as well. Currently at 2.62. So anything that's around the 2.5% range, I personally like. 3M in particular kind of seems to be one of the capital appreciation growth stocks. So for example, ever since the bottom of 2016, 3M has grown about 90%. So in the 2-year range, 90% from the bottom of 2016. So clearly 3M is a fast mover when money is going in that direction. So I really think it's just taking a breather right now. So that's one stock that I'd consider buying. The other stock that I really like is ITW. So a lot of you may not have heard of this, but let me go ahead and put it up on M1 Finance. So ITW is Illinois Tool Works. You guys can go ahead and do some research yourself if you're more interested in it. But it is pretty similar to 3M. It does do a lot of industrial type products, things like electronics, welding, polymers and fluids, construction products, and specialty products, as well as things like food equipment. ITW also pays around the 2 to 2.5% range of dividend yield, consistently increasing dividends for at least 25 years. And again, ITW is still on a discount. So it looks pretty similar to 3M actually, having this W formation here in the middle of 2015 all the way to 2016. And then, let's see, from that bottom, it's grown 120%. So that's one of the distinguishing features between ITW and 3M. I hear a lot more people talking about 3M than I do ITW, but I think this is even more aggressive of a growth stock. And as you guys can see, it's still currently on a discount. Relative to its 52-week highs, it is down 24%. So pretty good buying opportunity if I do say so myself. And again, still 200-week moving average is trending upwards, and price action is above that line as well. So yeah, the last stock I want to talk about is a bit more popular. I'm sure you guys have heard of this one, and that stock is AbbVie. So AbbVie is a little bit more tricky, I would say. This last week looked really good, as in terms of that candlestick. If we take a look on a daily chart, one thing I do want to point out is the a little bit of bullish divergence on the RSI relative to price action. And we're already seeing a bounce because of that. So pretty similar to 3M, I would note this green support. So price action first touched the support here at the start of April, and now it touched it again in the middle of, actually last week, I would say. And yeah, it's clearly a strong level of support. If we do break this, I would get really worried, to be honest. I know that there's still some laggards in the stock market, especially with something as big as AbbVie. But if we do break below this, I feel like the downturn will just continue, and you'll probably get a lot worse. So this is a must-hold level. We're still pretty much around that level, and relative to the 52-week highs, we still have about 20% to go. So yeah, this is a stock that I would consider. AbbVie, surprisingly, even though it's related to healthcare, pays close to a 4% dividend yield. So that's even more than the other two stocks that I just recommended. But yeah, so currently at 96 cents per share. This is something that I would get into right now, and I haven't added it to my M1 Finance portfolio, but I probably will pretty soon. But anyway, I hope you guys enjoyed the video. Let me know what you guys think about these three stocks. I always like to recommend the best of the best to my subscribers. So let me know if you guys do plan on investing in them, and what you think. So I hope you have a great day, and good luck trading.